I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Coming up in this show, I'm going to bring in my opening comments on the markets. I've always got a trade idea for you in the US dollar JPY using the askSlim methodology to improve your trade entries. I'll show you our special for level 4 membership where you can get a 35% discount. And I'm going to bring you analysis on the stock market with a deep look at SPY, the S&P 500 ETF, and I'm going to show you the VIX and using that to time a coming top. Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market moved up into midweek, and then that ended abruptly as high-flying mega caps hit a bump. Earnings reports from Tesla and Netflix really set the market moving to the downside as the Nasdaq fell. Tesla, well, the earnings were good, as was in Netflix if you just look at the bottom line. But on their conference calls, they gave some warnings, and Tesla fell almost 10%, and Netflix down 8.4% in what was some of the biggest declines, and actually panicky selling that we've seen in a long time, as those AI Nasdaq tech stocks just have gotten crazy on the upside. It was not all bad news, though. As the indexes moved down on Thursday, the Dow moved up again, and that made 9 straight up days on Thursday. And here on Friday, the Dow is up again. That's the best run for the Dow since 2017, which is illustrative of the rotational conditions and continued money flows into the stock market. Also, continuing to add support to equities this week was the economic data coming out of China, with news that they will add stimulus to help that ailing economy, as those economic numbers look pretty weak. And of course, investors are focused on the Fed this week, and those economic manipulators will meet on Tuesday and Wednesday, and markets are pricing in a 1/4 point increase. And with the Thursday unemployment claims, which were down again, in other words, the employment numbers looking pretty strong and a very strong unemployment rate at 3.7%, it's very unlikely that the Fed will be doing anything other than talking a skip or a pause, whatever you like. Do not expect language that talks about cuts. Our core PCE still at about 4.6%, and that's way above the target of the Fed, and they are not about to ease. Now, a recession may be not too far off, and things could, of course, change, but I don't think that happens until 2024. For the stock market, our proprietary indicators have continued to show strong upside momentum, with cyclical structures showing positive money flows. And despite the extreme magnitude of the upside advance, pullbacks are likely to be only brief and shallow. Even Thursday was a big decline for the Nasdaq, but it was really small relative to the size of the advance that we've seen. And at the same time, of course, there were buying in those other stocks in the Dow. I'll show my analysis later in the show, which indicates this bullish phase is not over yet, but it may only be weeks away from actually seeing a peak. And the rotation is clearly underway as money moves out of the techs with those crazy valuations and into cyclicals and old economy stocks. And don't be surprised if the upside tries in the tech stocks fail while broad market remains strong. Here at midday, the stock market is chopping around and has a little bit of an upward bias here on Friday. But for the week, the NASDAQ is actually down fractionally, while the S&P 500 moves up just under a percentage point. The Dow Jones Industrials gain 2%, and the Russell, where money is moving into the small caps and being helped by falling yields, Russell gains 5% on the week. Bond market pretty choppy, small upside moves. The 30's up about a half a point. The 10-year yield's right around unchanged. Gold market also unchanged, and silver loses about 30 cents. But we think that there is a dip coming and that the bottom has formed in silver and will be forming in gold, and a good upside opportunity coming in this metals market. The dollar, a good rebound this week, and it gains about 1.2%, but we think it's a sell. And oil market gains $1, and the upside move here may take it close to 80. You can get all of that analysis on 24 different futures contracts, indexes, ETFs, if you watch the Future Speak show every single Wednesday. And that gives you just unbelievable ability to understand the markets using our style of analysis in that great show that RV does on Wednesdays. I'll show you more about that just coming up in a few minutes. Do get acquainted with our website. Become an askSlim Level 1 member. It's just a great deal. It's $45 for 3 months, and you get information every single day. So please do, if you're brand new, become that Level 1 member. On YouTube, subscribe to the channel. Click the notification bell, and you'll get notifications when we put up videos. Like this video, give it a thumbs up. On Twitter, follow at askSlim. And questions that you have on our membership or huge offerings of education and analysis, write to Matt. That's Matt at askSlim.com. This is a trade idea. Arvi does great work on this stuff, and he's going to show you a bearish setup in the US dollar JPY.
This is an askSlim trade idea video walkthrough for an intermediate term short in the US dollar Japanese yen. Now in this video what we will do is walk through our askSlim level 4 chart grids that we share with our level 4 members, and we're just going to look at the USD JPY analysis. However, what I want to walk through here is all of the other symbols we also cover in the Forex market. We cover the US dollar index, or the $DXY. We obviously cover the USD JPY. We also cover the Euro USD, Aussie dollar US dollar, GBP US dollar, as well as the USD versus the CAD. Okay, so that is our primary focus list amongst the Forex market. Now let's go ahead and pull up our weekly cycle analysis for the US dollar versus the Japanese yen. And what we see here is a very likely intermediate term high that is now in place. You can see this clear downturn that has now formed as well. We are looking for a low to form on the intermediate term 731 to 94. The highest odds would be that this would form a bear flag and then give a turn down on the downside, likely to this 78.6 fib around the 136 area. If we go ahead and shift over to the daily chart, now we have our cycle brackets at the bottom, but we also have the askSlim option bias indicator, or the OBI. What this does is it gives you a sum of the evidence bias for swing traders over a 30 to 45 day time period. When it's green, that's positive. When it's yellow, that's neutral. And when it's red, that's negative. Now, one other thing that also happens is it also can go orange. When it goes orange, that indicates that it is either slightly overbought or slightly oversold, and implies that there would be a small counter auction in the direction of the trend. Okay, so that is really what you want to focus on right here in the USD JPY. What we're seeing in terms of our cycle analysis is a breakdown in what was a positive cycle structure. You can see higher cycle highs in place as well as higher lows. That now changed as we have a lower cycle low versus that old low. Therefore, what we would look for is a rally into these zones here and a failure. Now, for this trade idea, we're looking for this to fail in this zone from 141.15 to 142.07. If this closes over the 78.6 at 143.39, that would render this idea no longer valid. And we are looking for a move to this old low right here at 137.23, followed by this 78.6 on the weekly, which is at 135 135.97. So our downside zone is 137.23 to 135.97, and we are looking for a move into that zone here, into this next dominant daily cycle timing, which is due towards the later part of August. If we now go ahead and shift over to this next daily chart, this is a really valuable chart. What we've done here is we've taken the USD JPY and then overlaid the slim ribbon as an area chart. So when it's positive, you can see that this is green, and you can see how clear these signals that are coming out of the slim ribbon PO really are. Each of these signals led to beautiful follow-throughs on the upside. Keep in mind, these indicators are all available just for our level 4 members at askSlim. Now what's happening is we have turned back to the downside and are red on the slim ribbon and therefore red on the PO. What we're watching for is for a failure and then for this to turn back to the downside here on the PO and give a bearish signal that would therefore favor follow through back to the downside if we were to see that kind of action here in the PO. If we go ahead now and shift over to an intraday chart, this is a 2-hour chart of the USD JPY with the slim ribbon along with the prior day highs and prior day's lows. How you use that is when you're seeing lower highs and lower lows, you're clearly in a downtrend, and when you're in higher highs and higher lows, you're in an uptrend. So it just really helps to visualize the trend. We also have our askSlim PO, as you know, and we then have our askSlim MCI. What this does is it looks at multiple time frames to give you a sum of the evidence condition of a given market. When it's in the plus 25 or minus 25, that would be a neutral state. When it's over 25, that would be positive, and when it's below minus 25, that would be negative. And you can see right now it's reading right at plus 34, so a slightly positive reading in the askSlim MCI. Okay, so that is what the sum of the evidence here is across multiple time frames. And keep in mind, this is just one symbol. We do this across 26 other futures and forex markets, so it is a wide breadth that we cover here for you at askSlim, and all this is available for you as a level 4 member to load up right on your Thinkorswim platforms. Okay, so this is the opportunity that we see here in the USD JPY. As always, if you have any questions or comments, feel free to send me an email. Thanks again, and have a great day.
Great work on that, Arvi. Arvi showed that trade idea to our members this week. And what's interesting is here on Friday, the Bank of Japan reported that their inflation rate was 3.3%. That's higher than the U.S., which they've been in a battle against deflation for 30 years. And right now, their comment to that was, well, they're going to maintain their yield curve control, and that made the yen weaker, essentially made the dollar move up. And that moved the dollar up a little bit higher into the resistance zone that Arvi showed. And of course, you can always get the updates. Now, I still like this trade, and I think that we're going to see the U.S. dollar weaken further, and the U.S. dollar against the Japanese yen weaken further. Take a look here. This is our futures hub, and this is really important. Level 3 and level 4 members get this, and this has all of our updates in here. And what you can see in here by the colors, and you can see indexes, treasuries, currencies, metals, energies, grain, softs, and crypto. The colors in here show you the overall condition based on cycle analysis and those configurations, and you can see the U.S. dollar, Japanese yen is red right over there and showing you the conditions overall cyclically are negative. So you can always go back to that and refer to it. Also, whenever we do updates on these charts, I always put in my commentary. You could see in here the indexes, of course, are bullish. And here is the commentary of the notes that I put up when I do these updates. You can always get my opinion and when you come in and look at these notes, and always get the conditions of the market. For the U.S. dollar JPY as an example, here's that weekly chart that Arvi showed with time still for this to decline. And you can also get the daily chart and our video analysis and technical details by clicking on those. If I just scroll down a little bit further in here, you can see the Future Speak show is right over over there. And if you want to see the minutes on Future Speaks, you can go directly to the area on that video. It is right in here. So if you were looking at the currencies and you wanted to see the current analysis on the US dollar, Japanese yen, that's right in here with some notes on these bullet points. So all of this information always available to you in here as you look at this very, very valuable futures hub right over here. Just fantastic information that you can get and on all of these futures. So great work on that, RV. I just wanted to show the reference of how our members for level 3 and level 4, and take advantage of the level 4 special to get this, how they can reference our work that's updated all of the time. So just a great part of our website in here, and great work, RV, on that analysis. This is your opportunity to get everything that askSlim offers at a special discount. Our level 4 top tier at 35% off. That's only $303 for 3 months. That's $101.25 a month versus $159 a month regularly. And you're also going to get our market condition monitor, which is just absolutely amazing. This is a quick picture of that, and you can see what you can do here is toggle to the style of trader that you are right here. You're going to get over 115 symbols of most widely followed stocks and ETFs, and notifications when they change. You can just toggle right in here. You could scroll and you can see the different setups and the 115 different symbols, whether it sets up for the condition being very bullish or all the way to very bearish, and then the change log in here when things do change depending on the time frame that you're looking at. Just absolutely an amazing app, and wait till you get your hands on this. You won't believe it. And also, everything that is listed on this page, there is just too much to read in here. It includes everything that is in level 3, 2, and 1. Go to the askSlim.com website. On the top, click the Learn More button, and you'll see everything that's on here with details. You have to take advantage of this. This is one of our best offers ever. Just $303.75. That's $101.25 a month versus $159 a month. Just an amazing deal. Sign up for that right now. Stock market, we're going to look at this analysis, but first do please read this slide. It tells you about important information about our analytical style and what that means for you and how you apply the work. So this is important. So just take a moment to read this. Stock market analysis, S&P 500. We're going to look at the SPY weekly and daily analysis and projections. And we're going to also use the VIX, the VIX, to time the coming market peak. Now, we have seen a change in the market recently as we've seen the rally in the NASDAQ stall and actually have a pretty big pullback on Thursday, but at the same time, the broad market remaining strong, clearly money moving into the Dow, which is made up of cyclical stocks and old economy stocks, and the super high valuations in the NASDAQ supplying funds. Money comes out of those and moves into these other areas of the market. So when you get that, that's a pretty bullish occurrence still, because money's still moving in somewhere. And even though the nature of the market may be changing, we have conditions that support the market still moving up outside of some what we think are minor pullbacks that are coming, may have actually started, and then a further rally. And we think that rally is going to go out into mid-August, and I'm going to show you why and what the timing is on that as we look at these charts. First of all, just a little bit of a primer for those of you that are brand new. This is cycle analysis. I know the charts look busy, but once you get comfortable with them, they have a very, very good way to give you a sense of the conditions of the market. We have our proprietary indicators that are on here. This is the reversal scout right here, which I'm using as the momentum indicator for the intermediate or weekly chart. You can also use the slim ribbon, which is right on here. The slim ribbon PO is right here. And these are how we tell what the conditions are of the market, along with the shape of cycles. And cycles are essentially the heartbeat of the market. This is a way we visually see money flow. lows. And when you get cycles that are negatively configured, in other words, lower peaks and lower bottoms, you have negative situations. When you have a higher peak or a higher bottom, it sets up for the rally that you saw right in there. Let's just blow up the weekly chart here, and you can get an idea of where we are. And that is that the yellow areas are the periods of risk, and that is where a minor cycle and a dominant cycle moves to the downside together. Now you'll notice that each of these harmonic families are made up of half cycles and full cycles, this being the minor, this being the dominant. And when they're coming down together, then that is a period where you get risk of a correction, as you saw right over here. This was 37 points approximately on the SPY, or 370 points on the SPX, and there is a time frame in here that's coming up for another one of those where the minor and the dominant cycle begin to come down. Now here's your support zones right in here, so we're projecting that this pullback would come out sometime in beginning mid-August, then coming out potentially out to early October, where there's a pretty good likelihood that it's going to come down to supports. Now this support right over here is at around 438 on the 23.6%. The next one is down over here at about 427 on the SPY, and that's where we would look for this pullback to come into October or sometime late September, where the market does give ground. If this was a lot sharper on the downside, it will change the scenario for the upside move. But right now, ideally, this is what we expect, this period of correction in here, which would probably be, 6, 7, 8% on the downside in the stock market, looking at the SPY. Now I'm going to switch over to the daily chart here, and we'll get an idea of what's going on here. Also, the harmonics in here are just absolutely fabulous. Now, the thin lines that you see right over here, the vertical ones, show you where the low came on the mid-cycle, the shorter cycles in here, and then the darker one shows you where they come down together. This green one here is the Russell, and we've talked about the Russell getting a minor pullback in here, affecting the stock market, and then the market moving up again. So we're looking for a minor pullback right in here into the early to mid-August period, and then another move up. And this period right there is into this middle of August period. Now this is a long advance right over here, and you could see we're looking for a shorter advance here. Why would we be doing that? Well, the VIX is giving me some information that helps me with that. I want you to see that momentum conditions are strong. This is where the slim ribbon turned positive right over there, and it got neutral for a day over here, but basically it has stayed positive right there. The slim ribbon PO is giving you these bullish momentum resumption signals that you can see right in there, and that has kept this market moving to the upside. We've said that our technical condition indicators have told us that the market still had upside in it, and that's still where we are. And that's why we're looking for only a shallow correction in here as we look at the strength here on the weekly and the strength here that we're looking at on the daily. Now, I want to move over and look at the VIX because that's so important to this information. The VIX has been a great timing tool for us, and over the last year or 2 years, it's been great. It got a little bit out of whack for us for a couple of months, and now I think is in much better shape. I want you to see, as we look at the side by side, that there is a ideal low in the VIX on the weekly chart that points to the first to third week of August. We have this ideal low over here pointing to around the middle of August. This is nesting right over here with this low right over here. And last time that happened over here, you got set up for a big upside spike in the VIX. We think that's likely to happen. As you see, we're pointing to VIX out over here in September, October period that could be, up to 20, 22, and it could be all the way up here into the 30s. We don't really know. This is just that period of risk that we're looking for in the stock market, which we said could have a 6, 7, 8% decline, and the selling could get pretty severe in some of these very overbought NASDAQ stocks, which have just now started to move to the downside. So the VIX is giving us timing that the time frame right around the middle of August could be an important at least trading peak for the stock market. I'm going to go back to the SPY just to look at this one more time on the side by side, and you get the idea that what we're looking for over the next several weeks and even into the next middle of August right over here is a choppy situation. Potential for a pullback in here. On the minor pullback here, we're kind of looking for, this is 445 right over there, that it could pull back to. This is around 438 right there. That makes sense for a minor pullback here into the early part of August. Another rally here into mid-August that challenges the highs right there. Again, we think that the S&P 500 will probably slightly outperform the NASDAQ, but at the same time, I think that the NASDAQ will vastly underperform the Dow and the Russell. Russell benefiting from the this rising phase that we see right over here. We looked for a minor corrective period here to affect the stock market, and then moving up again. The Russell benefiting from lower interest rates that we see happening. And then the Dow, of course, benefiting from the move out of the NASDAQ stocks into the cyclicals and old economy stocks that heavily populate that Dow. So momentum conditions still quite strong, as you can see on here, but I want to go to the market condition indicator, as you can see right here. This is an important application that I think that everybody should have. It just gives you a great idea of the market conditions and the changing market conditions. We're looking here, of course, at the 4 indexes that I referred to. On the intermediate term, using our algorithms, you can see that the SPY turned very bullish and the NASDAQ very bullish back on the 12th of July. This was an uptick in the IWM back at the end of June. And the 13th of July is when the Dow went very bullish. Now, this is the intermediate conditions. We're in the trader mode over here. You could do a time frame mode also, but I want to step down here to short term. And you can see there are downticks right in here as the SPY is now ticked down to bullish, the QQQ to neutral, and the IWM ticked down to bullish, but the Dow remains very bullish. And this is reflective of what I'm saying, that money moving out of the tech stocks, the AI, into the Dow, and it's very apparent when you use our algorithms. Let's just look at the near term, which this is looking out for conditions over the next week or so, and you can see that the SPY is neutral now, while the QQQ actually went to bearish, the IWM and the Dow at neutral. So this gives you an idea for the very near term what the conditions are in the market. But we're focusing on the intermediate term and short term, and they're still pretty strong. And this is reflective of why we think that the pullbacks we see coming in the stock market are likely to be shallow, and that overall the market conditions to be very, very good until that time when that VIX bottom comes and sets up this peak that we're looking for right over here. Again, one more time, we're looking for minor pullbacks, likely the S&P, the SPY gets down to that 445 level. That's not very much, with a shot down over here into early August to about 438. This could be late July that this bottom comes in, this trough, and then move up again into this mid-August period to probably test this level on the SPY, take it out by a little or miss by a little, and then that riskier period right over here from mid-August to early October, where there could be a sizable decline that looks like this one here. This was 370 points. If it stays in the channel, that would get you down here to 427 to about 420 here on the downside. The deeper this goes right in here, the more risk there is that the next advance over here out towards the end of the year will be more of a struggle. So we'll wait to see where that goes. We are only looking for this modest decline in here of about 370 points or so out into October. That is really only that 6, 7, 8% decline and a very modest correction that we're projecting out into that period of risk, as you could see labeled right over there, from mid-August down into the early part of October. That does not mean it declines through this whole period. It opens up the window for that corrective process to take in, where this dominant and minor cycle are coming down together, just as you saw right over here. I really do want you to go to askSlim.com, to the top of the website, look at workshops. There's free videos there that you can see on the cycle analysis workshop, which is such important information. Again, here is that market condition indicator included with level 4. That's it for this update. I want you to go to askSlim.com and do look at the special we're running now. Click that Learn More button. You'll learn all the information on how to get level 4 and that market condition indicator and everything in level 3, 2, and 1 for 35% discount. And go to askSlim and do get acquainted with us. If you're brand new, sign up for level 1. On YouTube, subscribe to the channel, click the notification bell, like this video, and watch our member videos in the playlists. On Twitter, follow us at askSlim, and any questions you have, write to Matt at askSlim.com. That is it for this show. I want you to be so careful. It is so unbelievably crazy out there. And I'm always wishing you great trading.